The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN. You can watch us on Tiger TV at TFNN.com for free. You can also listen to us anywhere in the world on your mobile phone at TFNN.mobi. And let's check out where the markets are right now. We got the S&P. It is unchanged, flat. Exact same price it was at settlement, but it's still been a little bit of a wild ride. And we're going over, let's check out the Russell. The Russell is currently down about nothing. It's unchanged at the moment, just depending on what second you look at it. NASDAQ is down 10 points. The Dow is up 28 on the day right now. Oil is currently up 14 cents, with natural gas up 1.6%. Corn, big mover today, down 14 points. That's almost a 3% move on corn. Soybeans also moving pretty big, down 21, almost 22 points on the day right now. We got euro dollar up 23 pips, Aussie dollar up 22, pound dollar up 21, U.S. CAD down 43, U.S. franc up 4, euro yen is currently up 36, and pound yen is up 40. U.S. yen is currently up only 5 pips, so pretty small right there. We got gold down a whole 70 cents off previous day's settlement. Silver is currently down 1%. Copper is up a little bit, about 1/3% right now on the day. So that's where we're at on the markets. Sort of a quiet day. Yesterday was just a choppy day. I was looking over at the broad market index, and I go in and I plot the trends on here, and I go in and so as the trend changes, you go in and go, okay, well, what's the new trend on this? And we got a trend right here. So now we're trending up on the indices. Yesterday it was just cross. You just couldn't really keep up with it. And, if you went and you did every trend on it, it was impossible. So it was moving all around. Not an impossible day to trade, but just a tough day to trade. And but we're getting a little more, consistent, nice trend this morning, which is always a beautiful thing when you have that going for you. So that wraps up our current market analysis and looking at where everything is. We're starting to see the indices. They just did a nice push higher. From where they've been. Let's go ahead and pull them up. We'll look at them and see what we can put together. See if there's any possible trades we might be able to take advantage of today. And if so, then awesome. We can, maybe put on a trade on gold or silver or something like that. So I'm going to see if I can find something that'll line up. And when I say gold or silver, I'm talking about Nadex. If you don't have a Nadex account, hop on over to TFNN.com. Click on that Nadex banner on the right side of the page. Let me show you where that is, okay? So right here on TFNN's home page, just right there, TFNN.com. And on the right side, you're going to see a banner that says Nadex. Click on that. And now you can do two things. You can open a demo account. Under trading, just choose demo account. Takes literally about 15 seconds. So if you want to sign up for this right now, you can always trade along with demo and sort of see how it works and what it is that I'm doing, and start putting some of those pieces together. And it's a very cool way to trade. It's defined risk, and you can go in, you can place trades. You can do, if you've ever heard of vertical spreads, credit spreads, iron condors, things like that, butterflies, you can do these 21 times a day. Not just once a week or once a month. So there are an insane amount of trading opportunities that you can take advantage of. And I like to see if there's any that I can take advantage of about this time of day. I just closed one out. I had a trade that I put in, made a few $100 on the trade. And, which I know isn't anything like wow. But, it was a good trade. And I was able to go in and I went long on oil. And I bought them in the money binary. So what is an in the money binary? It's a binary that basically doesn't have to do anything and it profits. Okay? So I'll go over here and I pulled up oil Oil was about to expire at 2 o'clock. I saw it was trending up, and I went in and said, hey, I'll buy that strike. And by buying it, since the price was already above it, if it stayed above it, then I would be profitable, which is pretty nice. So again, it just had to stay above the strike. So what was the strike? So the strike, if we pull that up, let me see, I sent out to buy the 106.75. So if I go in and I pull up the oil contract right here, so 106.75, and I mean, you can just look at that. It's obviously a nice strike right there, but went in and said, hey, I'm going to buy this. And I went in, put the trade on. So right around about 20 minutes ago, which would have been, let's see, what time was that? That was about 12:50 or so. So right about 12:50, the price is right here. And I go in and put the trade on. It's trending up, trending up, trending up, and I'm able to have a profitable trade there. So let's see here. Something else we can do is one of the indicators I always add on. I like to throw on the 8-period moving average. So we'll grab that. Let's see here. There we go. And I'll add that in there. And so that way I can just sort of see that trend slowly forming and closing higher, higher, higher until, you know, then it runs up right there at the last minute. So, and there's different ways you can, you know, different kinds of charts you can look at. Renko charts. I use diagnostic chart bars. You can use different types of bars out there. But there's a lot of different ways to trade them. But that's one of the ways that I like to trade them. And we had a caller yesterday. Richard called in and talked about a ratio spread. And we're going into that and talking about different ways to do that. And sort of one of the cool thoughts I had is even on these expiration premium collection trades, you could really, I mean, you obviously are going to decrease your profit a little bit if it stays in the range, and you could lose a little bit more if it goes down, but you could go in and you could say, like, buy 2 of the 106.75s and buy a 106.95, which would have worked today. And if you did that, then you would have brought in $50, and basically you're shooting for about $50 in premium collection on the 106.75s. You'd have paid about $25 for the 106.95. So if it stayed in the range, you're going to net, say, $25. If it goes down and you get out when it hits the strike, you could lose, $75. If it takes off, you could make 50 plus 75, so you could actually make $125. So, sort of a cool trade based on the market staying flat, moving down a little bit, or taking off. And 3 of those scenarios, you're able to be profitable. And if it does really take off, you're able to make a nice chunk of change. So we might even see if we can find a trade like that today. Who knows? So let's go over here, and let's check out our metal. I'm going to check out copper first. We barely ever look at copper. And we're going to see if we can see something there that we think adds up. Got a little bit of a downtrend going on over here. So let's go into the spread scanner, and let's click on the binary scanner. And now let's go to the metals. And then let's put our risk parameters in here to get premium collection. And see if anything's showing up at the moment. So if you don't see anything, one of the things you always want to do is hit reset filters and make sure everything is showing up for you. Because sometimes there literally is just nothing there. Okay? So right now I don't see anything on gold. That doesn't mean we won't see anything on gold when we get down to about 2 minutes before it. We got silver at 125, and we got copper coming up. Oh, okay, copper, yeah, it expires at 1 o'clock. So it's already shut down, I forgot. All right, so, yeah, copper is like right before the show. That's why I never pull it up on this show. Anyway, so we'll drop copper off. We're going to bring this thing on down to the next 30 minutes. And we're going to bring this up to 65 by 95. Okay? So 0 to 30 minute expiration, gold and silver, 65 to 95 to see what we get. And right now, I mean, we have like 1 trade showing up on silver at $7. Probably not going to do that trade, but, if it gets a little bit bigger, we could actually look at it. And I use this to let me see, is there a trade that, is even worth pulling the chart up to look at? Because if there's not one there, it doesn't matter. Okay? And so right now, we got this trade, and you could go and you could sell it for about $10 if silver. So let's pull up the silver contract right here. Silver stayed at or below 20.3. It's not a horrible trade, actually. So it has about 10 minutes and has a decent amount of movement required for it to be profitable. It's a very small profit trade. So that's one thing you just want to be aware of. I mean, there's just not a lot of profit in there. And by the time there is, I mean, it could be a lot higher risk. So, that is one trade you could look at doing. So just to bring in some, easy premium collection, $90, say if you did 10 contracts on that trade. And again, on this trade right here, so what I'm doing is if I go and I do this, I sell the 20.30. Okay? And I'll put a, line right here for you. So 20.30 means that so long as for the next 8 minutes, okay, silver stays below 20.3, right here, this level right here, if it'll stay below it, then I will be profitable. What's nice about this isn't like an over-under, type thing where it's like, hey, where it is right now, if it goes above it, I'll be profitable. It goes below it, I'll, all that stuff. This is it's already below it. Okay, so this is why, I call it premium collection, because time actually will make you the money. It doesn't have to move at all. If silver does nothing, then you'll be profitable on the trade. Okay? If it moves down, you'll be profitable on the trade. If it moves up a little and doesn't hit 20.30, you'll be profitable on the trade. Now, one of the things I do is if it gets up to 20.3, I bail. Okay, because I'm going for $10. It's already going to be hard enough if I have to take like a $30 or $40 loss on this trade. I do not want to be taking a $90 loss on this trade. It'd take 9 profitable trades of that size to make that money back. That would not be wise. But it is a nice distance right now from where the market's at. So that's why, I consider that, a potential trade. I usually would prefer, honestly, to get, 15, 20, 25. About 10 is about as cheap as I want to go. And the one advantage, I will tell you, to the $10 trades, and now obviously it can be just as easily outweighed by the disadvantage. But the one advantage to the $10 trades is, they're usually going to be really far away from the market. So you have a nice, decent distance. And even if I'm doing that kind of trade, I really like to, have as little time left on the clock as I can, so that way I can take advantage of, just that theta decay. If you've ever studied options before, like options decay in value rapidly going into the last few minutes, or really the last, month, right? The last 30 days on a normal option. The last week, it decays even faster. The last few minutes, it decays really fast. And that's sort of what you're counting on. You're making money on time decay constantly throughout the day. So, all right, we'll stay there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. So we got that silver APC trade in. It's basically profitable. We just got to wait for the clock to run out. And we went in and we sold the 20.3. We got 30 seconds. Tick-tock, tick-tock. As soon as that's done, profit is in your pocket. And it's pretty cool because you can actually, instead of, if you trade like index options, like a lot of times you're waiting for them to determine settlement to release funds the following day, so you had the funds available so you can do the trades. And I've had Russell, like where it took forever, literally it wouldn't until Monday till I had the money back. When I was doing like, RUT, iron condors and things like that. But, anyway, which I hate holding till expiration just because they have weird settlements over on the RUT. But right there, we had that big, you can see that spike too right there in the volume there, so where the silver market just shut down. But, yeah, we expired below 20.3, so profitable trade right there. And so that lets us see that. We can go in and we can pull back up the scanner, see if we have something maybe for gold. And maybe one last trade before it all shuts down. Let's see what we got going on. We have a 1335. Well, let's go in and let's look at the gold, because just because you got it don't mean you want it, okay? So we got that gold contract. Ooh, that gives us about 6 ticks on there. So to get in that trade, and for that you can get that for about $15, $16 on that trade. 13.35. So that's a pretty close trade. You got to be careful there right at the end of expiration. Look at your ticks, look at your time and sells, look at all that fun stuff, and see if you can get it. But it looks like, it could be a profitable trade. And so we got that one in. We'll see what else we get, and if anything else comes up as well. So you can get it for, $10, $11 at this point. So, I mean, it's decaying quickly. So time on your side. And again, what are we doing? We're selling, okay, the gold binary, saying that gold will expire below 13.35 at 1:30 p.m. And actually, sell means at or below. So as long as the settlement price is at or below 13.35 at 1 p.m., then the trade will be profitable. And I literally saw the thing go from 20 to 16, to 8. And, they move really, really, really fast. That time really comes out. And you can go in and you can place a lot of cool trades. There's a lot of variety in there, and it'll bounce up and down. Now, the most important thing that you need to know about these trades, and I say this every time, and I say it over and over again, and I do that on purpose, because risk management is more important than anything in trading, okay? And by the way, you could have just got 15 again. It literally bounced from 7 to 15 on the bid side. So now it's back down to 7. So I got all my 15s filled there. But anyway, so if it hits your strike, okay? If it hits your strike, you just got to get out. And I know I've repeated this, but I know some people who don't. And what I got to think of is, what is it going to take me to make it back? Okay? What is it going to take for me to make it back? And is it worth the loss if I hold this thing all the way to and through expiration? Okay? So that's why you need to have that in your mind, so you're willing to hit that button without hesitation to get out of the trade if it goes against you. And it's just, I can't stress how important that is, that you keep to that rule. Sometimes they're really close. Right here, we're pretty close on this. So we got a really wide bid-ask spread. Basically, there's almost no quotes left in the market. You got a $4, you got some $16. The $16 are probably people trying to follow this trade right now. They're selling, but it's already dropped. There's really no reason for those quotes to be in the market at this point. We only have a couple minutes left, so there'd be no reason to go and be trying to buy for 16. But anyway, so as it's going down, and it drops a little bit more, and also know when to pull your trade. So you may not want to be selling for 16 at a certain point. Like right now, you may be ready to get out. You may not want that $16 sell. So yeah, I see some $16 dropping off there. You may not want that trade, okay? And if it comes up and it hits it, you need to be looking to exit, okay? See, right there, 13.35. And I want you to see the good side, the bad side, everything about this, so that way you know how to manage it. Right now, we're just getting right up on that bid over and over and over again. All right, we'll be right back after this break. Let you know how it works out. Demo trade this till you got it, okay? Bye.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So that was really interesting. Remember, one of the rules I say over and over and over and over, I think I've repeated it like 10 times on this one show today alone, is that you want to get out of a trade when it hits your strike. And usually you can't do that in the last 2 minutes. But I'm guessing some traders were not listening to that rule. I don't know if they were following this trade or what they were doing. But I saw some trades that were sitting in there. They were going in to sell at 16, which means they are giving an offer at 16. So I could buy back when it hit the strike at 16. And, I mean, I should have to buy back like at 50. So make sure that you don't have your premium collection trade in to sell at 16 when it's already at your strike. So that would be a bad move on your part, especially in those last 2 minutes, okay? All right, looks like we got a caller right now. Jason in Las Vegas, Nevada. You there?
Yes, I am, Darrell. How are you?
Hey, I'm doing good. How are you doing?
Good. Darrell, I'm sorry. I missed that last part because you just came back. But on that expiration trade we did on silver, now you say to dump it if it hits the strike price, correct?
Right.
Okay, now how do we do that with inside the 2 minutes? Because I was under the impression that you can't do anything within the side of 2 minutes to expiration.
You can. It's just another trader has to take the side of the trade.
Okay, so it's not guaranteed to go through, though.
Right, yeah. I mean, basically the liquidity is going to dry up a lot in those last 2 minutes. So like on gold, like there were some people, I guess, that had sell orders still sitting there, which means it became a buy order. So you could have actually got out like at 16 on gold, like during the 2 minutes, because there was, I don't know, like 6 or 7 contracts just sitting there, still trying to sell, even though it had already hit the strike. So that'd be another thing. Is like, so if you're going in to put in a trade to sell it, and the 2-minute warning comes up, you don't want to still have, especially if it hits your strike, you don't want to have that trade on. You know?
Okay, gotcha.
So you don't have, I don't want to have a pending entry order probably in the 2-minute warning, but I definitely don't want to have a pending entry order for premium collection that's like less than $50 if it's at my strike ever. So if it comes up to 1335 and you're selling the 1335 for 16 and you haven't got filled yet, and it comes up and hits it, I mean, you don't want that thing hit. I mean, you should be getting $50 if it's at the same strike, right? If that's at the price as the strike.
Okay.
Yeah. So the silver one, I mean, we were so far away on that one. I mean, we had plenty of room. We were cruising on that. So gold was close. So you notice I said, I was like, sort of like silver. We were up here at like 20.3. So we had, absolutely no, concern at all on silver. Gold one was a little bit closer. I was a little bit worried about that one. We went in for it, and we were doing great until literally like 1 minute in, and then I don't know why, but some people left their orders sitting in there. And but the big thing, pull those orders. Yeah, it's like right here in that last minute. I mean, it just popped us. And but yeah, definitely. I mean, if it hits your strike, you have an entry, pull the order. Obviously get out. Put in an order to get out. So I'll literally have a ticket up ready to exit, and I'll put it like a buyback at 60 because it'll fill me at the best price. Okay.
Okay.
So you go in and you put a buyback at 60, and if the thing's quoting at 16 or 15, I mean, it'll fill you at 15 or 16 on how many ever contracts are available at that price. And if it's quoting at 50, it'll fill you at 50. But I just have it there because I want that ticket ready. I don't want to be like fumbling to go to my open positions and click on it, and because the thing could move from like 50 to 60 to 80 like really quick.
So you're already
I have
working
an out-of-ticket window ready, to put my position on.
Okay. Thanks for your clarification, Darrell.
Oh, yeah, no problem.
Take care.
They're fun. Have you been doing them much yet?
Pardon?
Oh, I said, have you done many of these trades yet, these expiration trades?
Oh, yeah, when I can follow your radio show, I listen to as much as I can, and I try, obviously, doing them on my own a little bit. But, yeah, I've just still been learning about the trending and things like that, so just kind of treading lightly with it. But I've been successful.
Yeah, it's one of those, I mean, you really want to get it down and either, demo trade it to begin with and then very lightly trade it when you go live. And the big thing is once you get it down, though, you just got to go for it, because you need to do enough of them to pay for occasionally when it doesn't work. And but overall, I mean, we have a lot of good trades. So
yeah, I've been doing pretty good with it, demoing, so I'm getting the hang of it. But just like you said, get your feet wet and get into it and do it.
Yeah, and then like keep your risk low. Like don't put one thing I tell people on these trades, don't do more than like one contract per $1,000 in your account.
Okay.
Things like that. Because if you do get hit, you don't want it to wipe you out and devastate you.
Okay. So that's the general rule, one contract per 1,000?
Yeah.
Okay.
Exactly. Yeah, because think about it, if you lose on the trade, let's say you went for 20, you lost $80. I mean, that'd be like an 8% hit on a $1,000 account.
Okay.
Now that's if you couldn't get out. If you got out, you'd lose $30. So it'd be 3%. But yeah, so I mean, you really don't want to go any bigger than that. Just because psychologically, it's going to mess you up. It's going to make it harder for you to take those next couple trades to make the money back. And that's the other reason why, I tell people, don't hesitate. Get out when it hits your strike, because it's not just the loss; it's also having to make a whole bunch of wins just to get back to break even. Because that's how even though that's not how you're supposed to trade, your mind still thinks that way. And the psychological damage of taking the hit, it's so easy to take a $20 or $25 loss and make $20 or $25 back on the next trade.
Okay.
So, but if you take like a $75 loss and you have to go through 3 more trades to be where you were before that started, that's a psychological beating. So it messes you up in your trading. So. Okay, I will make a note of that. I appreciate the call and let me talk to you, and I enjoy the show. Awesome. Thanks for listening. Appreciate it. Okay, have a good day. Hey, you too, man. Have a great day. Okay, bye-bye. Bye. All right, so those are the premium collections for, really the 125, 130, and, we may see if we can find 1 or 2 more here at the 2 o'clock expiration. A lot of times I'll look at FX for those, but we may even look at oil, just sort of find what's trending, what's moving, and if there's anything that we can go with. All right, so in the meantime, let's check out a couple other things in the market right now. One of those is I like to look at just the news. Things we need to be aware of on the news this week. And I really haven't done a full news run-through for the week. So let me pull that up, and we'll get going. So this week, let's see here. What do we have on the docket? Well, this morning, and today being the 23rd, we had a little new straddle strangle that could be done over, actually, sorry, that was last night, or tonight we have that coming up. We're going to do a new straddle strangle. We had the Canada's core retail sales come out as well. And so let's pull that up right here. Let's go to USD CAD. The morning trade. Tonight we have the Aussie report. We'll talk about that one. And let me back up a little bit. So right here, the report comes out in the morning at 8:30. And so we're basically looking for a move, decent move on the USD CAD. And we got a pretty good move right there. It moved from like 103.35 down to 102.95. So let's see, let's go like right to the before and after. Okay, so right here, we got a close of 103.32. Got a low within, we'll say if you chose the 10 o'clock expiration here, the low of 102.98. So what does that put us at? About 34, 40 pips. Now within 2 hours, we got on down, which is sort of what most of my stats are based on, our 2 hours. We got a low of 102.86. So we definitely hit our 50 pip move. And what I found was the USD CAD usually will go in and, or does not usually break 50 pips. But when it breaks it by a lot. So it's basically, here's the stat. 40% of the time, the USD CAD will break, okay? Will break 50 pips. Meaning 60% of the time, it won't. When it does break it, then it's usually a massive move, okay? And we're talking about the Canada core retail sales number. So when it does break it, it's usually a very large move. And the reason we know that is because if it doesn't break it more than 40% of the time, if it doesn't break 50 pips more than 40% of the time within 2 hours, but the average range of all the moves afterwards is 60 pips. Okay? But, so right there. So you got to combine together the average range plus you got to look at the percentage it moves 50 pips. And so that wasn't really like a straddle strangle trade. That was a be aware trade. Now tonight we do have another trade coming out. We have the Aussie dollar CPI. That number's coming out. I'm looking for maybe, the expectation is 0.5, so I'm hoping for like a 0.8 or a 0.2 release on the Aussie dollar. And if that does come out, then the Aussie dollar 75% of the time will move at least 50 pips. And the average move is basically 50 pips. So it has some that are a lot less. It has some that are a little bit more, but it actually comes out to about a 50-pip move. So that's really what we're shooting for, is a 50-pip move on the Aussie dollar straddle strangle report tonight. And you should get about a 30-pip spike off of a little bit less than 30 pips off of the announcement. So we haven't had an Aussie dollar nighttime trade in a little while. So that line's straddle strangle up you can do this evening over on Nadex. And let's see here. Looking on over, what else we got? Well, tomorrow we're going to have a lineup, okay? And this is an interesting one. Tomorrow we're going to have the U.S. new home sales. It usually doesn't move that much. In fact, the U.S. yen, 0% of the time, at least on my averages so far, breaks 50 pips, meaning it hasn't broken 50 pips in the last 2 years, once. On this news report, the U.S. franc's only broken it 20% of the time. The U.S. CAD's only broken it 16% of the time. The Aussie dollar's only broken it 33% of the time. My favorite trade on it is actually a butterfly into the news. If you can start this trade in and go for like around 9 o'clock, get in, going for the 11 o'clock expiration. The average range on the U.S. yen 2 hours after is 38 pips. So if I can go into this trade and know that it basically doesn't break 50, if I can get about a 40 pip wide binary butterfly, the wider the better, then that's a high probability trade. So I'm actually binarying into the news. That's how unvolatile it is. And then I even have stats for before it. So like 90 minutes before, like the US yen, usually an Aussie dollar, both usually move about 30 pips up and down. So if I can get a 30 pip range on that, then that's good. If I go into, 60 minutes before it, then I'm only getting about a 25 pip move on the Aussie dollar and US yen. And if I go in 30 minutes before the news report, only about 15 pip move on the Aussie dollar and US yen. So if I can get a butterfly with that kind of range, then that's a great time to do binary butterflies. That is the time I like to do binary butterflies, is before the news. Sometimes into it, but I'll, definitely before, when I can do a news report where like it's a 10 o'clock news report, and I can do binaries on it, 9 o'clock, 10 o'clock, 11 o'clock. I love that, because then I have the pre-stats of how far it moves before and after, and we got those butterflies that expire like every hour that you can take advantage of. So that wraps up tomorrow. Also, of course, we have weekly inventory reports. Be careful, oil inventory. And then we go on into Thursday. We're going to have a nice pound dollar setup. The UK preliminary GDP is coming on out. And it looks like the move on that one, we got an average of about 70% of the time it breaks 50 pips with an average move of 70 pips. So 70% of the time it breaks 50 pips with an average move of 70 pips. So you could use that and go in and say don't risk more than $40, $45 when doing a straddle or a strangle on Nadex and having a profit target of about 70 pips away. And by doing that, you're able to have like a nice one-to-one risk reward. And be aware, all those are averages, okay? So, I'm looking for a deviation from the forecast. If it comes in like at the exact same, at 0.6, I'm probably going for break even. And on the pound dollar GDP, I'm hoping for like 0.9 or 0.3 on that. If I get one of those, then we're going to get a nice move on the pound. And let's see, you're going to have a couple things to be aware of. On the 25th at 4:30, you're going to have the German IFO Business Climate Report. That'll have an impact on the euro dollar, about 20, 30 pips probably. Then we're going to have existing unemployment and core durable goods coming in at 8:30 here in the U.S. Again, it can make the indices move a little bit at reverse, cause maybe a 20 pip move, maybe 30 pips on Forex. And let's see, we'll also have our natural gas reports at 10:30 on Thursday, so make sure you have those on your calendar. And we got our normal crop reports coming out after the market closes on Friday. And that'll wrap up your news reports for the week that you need to be aware of. Okay, even if you're not doing these straddles or strangles, don't write this off. These are events that will make indices turn around and go the other direction. So if you're trading the S&P and things like that, these are things that will actually make it change direction. So you need to be aware of it. Or little things that will accelerate the move. So you need to be aware of it, okay, and how it impacts what you're trading. And, and sometimes you need to get out of the way if it's a big enough impact report. Fed funds coming out. You need to be aware of it. Oil inventory. It amazes me how many traders I come across. They're like, what just happened? I'm like, what are you trading? Oil? What do you mean what just happened? Oil inventory report came out. It comes out every single week on Wednesday. Don't trade oil unless you know that report is coming out, what it means and how it impacts oil. At least don't trade it on those days until you figure it out. So, and you can use a lot of websites, investing.com. You can use, there's a bunch of them. There's Forex Factory. There's a bunch of different ones that give the results. They'll update them usually within a few minutes of the report coming out. I like Financial Juice because it'll just stream the feed straight through. It's very helpful. All right, we'll stay there. We'll be right back after this break.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today.
An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on here to the Diagnostic Trading Hour. We're going to see if there's anything left here at the bottom of the hour to see if we can find any possible trades. So one of the things I'll do is I'll go in and I'll just choose, like, say, all the currency pairs, okay? And or anything that has an expiration, like, as of now. And so I can scroll down and go, are there any that look like, wow, that's a nice big premium? Can I trade that? So I say, like, oh, there's a $20 one on the Dow that expires at 2 o'clock. And going down, still there. Okay, $20. It's at 15.3, 15.4. So just trying to look at the trade here. 531. That's 535. That's pretty close. That's 4 ticks. So that'd be one trade you could look at. But the Dow is trending up, so not highly suggested. Okay? And so we can scroll on down and just see, is there anything here? And sometimes there is, sometimes there isn't, because we're coming into literally, like, 5 minutes left on the bell. All right, we got USD yen. Now, USD yen, beware. USD yen is a little more crazy volatile, especially pound yen, euro yen. Look at that thing. This went from like 15 to 6. And it is trending down, so I like the direction. I love the order, and it's gone. So I'll get $10, $8. Look at that thing just flying around. So you can open that up, see if you can try to catch it. And but not necessarily an easy one to catch right there. And so just looking at that and, you know, seeing if it'll be wild enough. But, I mean, it's wild and crazy. 99.5. And you're trying to go in and, you know, capture this thing. It's 99.50. You're looking at 99.55. US yen is a crazy, wild thing. Look at that. We saw this thing go from like 3 to 7 to 9 to 10 to 3. And I think it hit like 15 at some point in the middle of all that, too. So look at that. 15. There we go. Look at that thing. I mean, it's moving. 20, 22. So I want you to be aware of this. I'm not putting this trade on, by the way. I want you to be aware of this because this is like US yen is insane volatile. Okay? I mean, it's crazy, crazy volatile. And so is like pound yen, especially pound yen, euro yen. So you can go and you can see these trades. Now, there are ways to take advantage of them. We may talk about those on one of our future shows. But think about this. This thing was $3, and let's say it's 3 by, 11. Now it's up at 36. So you could have bought it for like 11, sold it for a 28 bid, and for your bid ask there, potentially. So there's a lot of ways to trade them. Just understand they're more volatile, so they're a little crazier to try to hop in on and do these trades. And we're talking, you're getting $27 a premium for being a pip and a half away. 2.5 pips, I guess, technically. So, or what, a 1.6, because they're going to round it all the way out. Now we're like half a pip away. Look at that thing. That is just insane. And 1 pip away. And all it's got to do is just, have those last few ticks right there be above 55, and it's a loss. And it's getting it really, really, really close. So that's one trade you could look. You need to really be careful on these trades. These are more like pound yen, euro yen. This is the kind of trades you go for 10 or 20 bucks and you get out. Pound yen, euro yen. See how we have a lot of premium in these? It doesn't surprise me, simply because of how they work. And one of the cool things on Forex is you can open up the ticket on Forex and actually see the price right there in the ticket. So in 4 pips, maybe a decent amount on the Dow, but it is not a decent amount on the yen pairs. So, and you can get them all opened up. So I'll open up like 3, 4, 5 of these things, and mostly what you open up is 5. And I've actually asked them if there's any way to open up more. And now we just went in the 2-minute zone. Boom, quote's gone. So, and it looks like somebody still has a quote there on the Dow. So sitting out there for some reason. So every time I see that, I want to go over and look at it and go, hey, is there a trade? But, so, yeah, somebody's just got it. I guess they're trying to buy back or something. But, we'll see. Okay, all right, we'll be back tomorrow. So make sure you tune in then, and y'all have a great day.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.